Welcome to the deep dive. Today we're getting into something that, well, it might sound a bit strange at first. We're exploring the surprising link between, how often a trading strategy actually wins, your mindset, and crucially, risk management.
Yeah, we found this a really interesting trading tip. It's quite short, but it packs a punch because it challenges a lot of common assumptions.
Exactly. So our mission, really, for this deep dive is to unpack how a strategy that only wins, say, 20% of the time,
Mm.
how that could possibly be profitable.
And, just as important, how one that seems amazing, like an 80% win rate, could actually lead you to, well, to disaster.
Okay, yeah, let's try and make sense of this. It feels a bit upside down.
It really does. I mean, your first thought is always going to be more wins equals more money, right? Less risk.
Hmm.
But this tip kind of flips that idea completely, and that's where, the valuable stuff starts to pop out for you.
Right. So the core idea here, it seems, is that mindset and risk management, they're not just extras, they're absolutely central. The tip puts it pretty bluntly. With the right trading mindset and risk management, a strategy with 20% win rate, you can make money in trading. That's quite a statement.
It is bold, and what it suggests, I think, is that the actual mechanics of a strategy, like the buy and sell signals, that's just one part, how it performs in the real world, that seems to hinge much more on your psychological toughness and how well you cap your losses.
So like having the discipline to stick with it even when things aren't going well.
Exactly, because you will hit losing streaks. Every strategy has them. A good mindset lets you weather that. And solid risk management. Well, that stops those streaks from blowing up your account.
Okay, and then there's the other side of the coin, which is maybe even more surprising. The tip also says, without right trading mindset and risk management, with even a strategy with 80% win rate, you can go bankrupt in trading. It just sounds wrong somehow. 80%.
It does sound wrong, but it points towards a critical factor, the size of the wins versus the losses. That high win rate can breed, well, a dangerous overconfidence.
Ah, okay, so you feel invincible.
Kind of. You might start thinking, hey, I mostly win, and then you bet too big. Or you stop cutting your losses where you normally would. And if those few losses, those 20%, are huge compared to all the little 80% wins, you see where this is going.
Yeah, you could dig yourself into a massive hole pretty quickly.
Precisely. And psychologically, maybe you start deviating, chasing losses because you're not used to them, or cutting winners short because you're scared to lose the small profit. All sorts of bad habits can creep in.
Okay, let's focus on that 20% win rate thing for a minute. Seriously, how does that work? Losing 4 out of 5 times and still making money.
It sounds wild, but it boils down to the risk-reward ratio. Simple maths, really, but hard psychology. A 20% win rate can be profitable if, and it's a big if, your winning trades are much, much larger than your losing ones.
So, like, you risked $1 to potentially make $5 or $10?
Exactly like that. If you risked, say, $100 on a trade, your target might be $500 or more. Your losing trades are capped at that $100 loss. With a setup like that, you only need one win to cover several losses. That 20% win rate starts to look viable mathematically.
Okay, mathematically, I get it. But emotionally, sticking with something that loses 80% of the time, that sounds brutal.
Oh, it is absolutely brutal. That's where that right trading mindset becomes non-negotiable. You need immense conviction in the strategy's long-term edge. You need the discipline to execute it flawlessly, loss after loss after loss, knowing the big winners will eventually come.
I imagine most people would just give up or start tweaking the system constantly.
Many do. It takes real resilience to see those losses as just, the cost of playing the game and not get derailed emotionally. You have to trust the process.
Right. Okay, let's flip back to the easy one, the 80% winner. What are the specific psychological traps there beyond just getting cocky?
Well, overconfidence is the big one, definitely. It leads directly to poor risk management. You might think, this one's a sure thing, and put way too much capital on it.
So breaking your own rules because you feel like you're on a roll.
Exactly. Or another trap is becoming loss averse. You get so used to winning the small amounts frequently that when a trade goes against you, you just can't accept the loss. You hold on, hoping it turns around, and that small, necessary loss balloons into a catastrophic one.
The hope strategy. Not usually a good one in trading.
Almost never. It's like you forget the basics of protecting your capital because the wins have been so easy, you stop respecting the risk.
So that high win rate, it's almost like a siren song, luring you onto the rocks of bad risk management.
That's a great way to put it. It masks underlying weaknesses. The frequent positive reinforcement makes it hard to see the danger until, wham, one big loss hits and exposes everything.
It really underscores that success isn't just about being right often.
Not at all. It's much more about how much you make when you are right versus how little you lose when you're wrong. That balance is critical.
So thinking about you listening to this, what's the main takeaway here if you had to boil down this whole discussion from that one trading tip?
I think the absolute key takeaway is that trading successfully, and maybe this applies much wider too, it requires a holistic view. Your
Right.
strategy, yeah, it matters. But it's just one leg of the stool. Your mindset, discipline, emotional control, patience, that's another massive leg.
And the third leg being risk management.
Absolutely. How you define your risk, how you control losses, position sizing. That's arguably the most crucial leg for long-term survival and success. They all have to work together.
So it prompts a question for you, doesn't it? Are you maybe focusing too much on finding the perfect strategy with a high win rate?
And maybe not enough on building that resilient mindset and implementing really strict risk controls. It's worth reflecting on your own approach.
Yeah, that's a powerful point. It really shifts the focus from just the system to the person operating the system. So summing up then, this concise little tip really revealed that success or failure in trading can hinge massively on mindset and risk management.
Potentially even more than the raw win percentage of the strategy itself. They can be the difference makers.
Which leads us to a final thought for you to maybe chew on.
Yeah, think about this. Where else in your life does this principle apply? Where is having a good plan or a high initial success rate maybe less important than your approach, your discipline, and how you manage setbacks or risks along the way? Something to consider.